Hello everyone, I'm Luying. Today I'd like to talk about the accounting for business. Now I'm going to start by the financial environment in Australia. Australia aims to promote investor confidence and integrity in the economy, companies, and capital markets. Proponents of this approach are clear and consistent financial reporting, which is required by law. The same reporting standards apply to all Australian states and territories. Business in Australia may be required to report to the Australian Tax Office, the Australian Security and Investment Commissions, and the Australian Stock Exchange to take into consideration all transactions which affect business entity. Measurement is the process of quantifying transactions in monetary terms and must be completely in order to record transactions. The recording process results in systematic record of all the transactions of an entity and provides a history of business activities. Communicating is preparing the accounting reports, analyzing and interpreting. The conceptual framework that has been developed to date consists of 4 sections. The object of general-purpose financial reporting forms the foundation of the conceptual framework. It is to provide financial information about the reporting entity to the resources providers that is useful in making decisions about providing resources to the entity. Second, this section is still under development by the ISB Use Australia SAC1. It is important to determine as a reporting entity must prepare external general-purpose financial reports that comply with accounting standards. SAC1 are entities in which it is reasonable to expect the existence of users who depend on general-purpose financial reports to enable them to make economic decisions. Third, the financial statements that provide vital information to users when making a variety of decisions. Finally, the quantitative characteristics are classified as neither fundamental or enhancing depending on how they affect the usefulness of financial information. Enhancing qualitative characteristics and fundamental qualitative characteristics are complementary. Accounting have 4 main financial statements. First one is income statement. The purpose is report success or failure of the entity's operations for a period of time, and managers are interested in the bottom line because they allocate resources based on their benefits about an entity's future performance. Third one is statement of financial position. Report assets and claimant to those assets at a specific point in time, based on the basic accounting equation. assets equal liabilities plus equity. Last one, interrelationships between the statement. Statement of financial position depends on result of income statement of comprehensive income and the state of change in equity. Ending amount in the statement of cash flow is reported in the statement of financial position. Last part, we will use the transaction of One Limited for the October to explain the recording process. Number 1. Issues share for cash. On 1 October, One Limited issues shares in exchange for 10,000 cash. This is a transaction because it involves an exchange which results in an increase in both assets and equity. There is an increase of 10,000 in cash and increase of 10,000 in share capital in the records of One Pty Limited. The effect of this transaction on this basic equation. The equation is in balance. The source of each change to equity is noted to the right of the transaction. In this case, the source of the change was a share issue. Keep track of the source of each change in equity is essential for later accounting activities, and in particular, the calculation of profit. Next, borrow money from a bank. On 1 October, One Limited borrowed 5,000 from NZ Bank. This transaction results in an equal increase in assets and liability. Cash increased 5,000 and the bank loan increased 5,000. The specific effects of this transaction and the cumulative effect of first two transactions are like this. Note that total assets are now 15,000 and equity plus the new liability also total 15,000. Number 3. Purchase of office equipment for cash. On 2 October, One Limited acquired office equipment by paying 5,000 cash to Superior Equipment Sale Limited. This transaction resulted in equal increase and decrease in one's assets. Office equipment increased 5,000 and cash decreased 5,000. The total assets are now 15,000 and equity plus the liability are also total 15,000. Receive of cash in advance for customer. On 2 October, One Limited received a 1,200 cash advance from Arknox Silent. In the transaction, cash is reserved for advertising service that are expected to be completed by One Limited by 30 December. In the magazine and airline industry, customers are expected to prepay. This business have a liability to the customer until the magazine are delivered or the flight is provided. As soon as the produce or service is provided, revenue can be recorded. Since One Limited received cash before performing the service, One Limited has a liability for the work due. Determine when the recorded revenue and when to record revenue received in advance. In this example, cash increased by 1,200 and a liability service revenue received in advance increased by an equal amount to October. Number 5. Run the service for cash. On 3 October, One Limited received 10,000 in cash from Copa & Co. for advertising service performed. In this transaction, One Limited received cash in exchange for service. Advertising service is a principal revenue-producing activity of One Limited. Revenue increasing equity. Both assets and equity are then increased by this transaction. Cash is increased by 10,000 and the retained earning is increased by 10,000. The new balance is the equation R. Often business sell goods or provide service on account. That is, they provide service or goods for which they are paid at a later date. Instead of receive cash, the business receives a different type of assets. An account receivable. Account receivable represent two rights to receive payment at a later date. Suppose that One Limited have provided this service on account rather than for cash. This transaction would have been reported using an accounting equation as this. Later, when the 10,000 is collected from the customer, account receivable would decrease by 10,000 and cash would increase by 10,000. Noted that in this case, equity is not affected by the collection of cash. Instead, we record an exchange of one asset for a different asset. 6. Payment of rent in cash. On 3 October, One Limited pays its office rent for this month of October in cash, 900. Rent is an expense current by One Limited in its effort to generate revenue. Expense decrease equity. This transaction result in a decrease in cash and increase in rent expense. It is recorded by decreasing cash and decreasing to maintain the balance of the accounting equation. To record this transaction, cash is decreased by 900 and retain earning to decrease by 900. The effect of the payment on the accounting equation is Number 7. Of insurance in cash. On 4 October, One Limited paid 600 for a 1-year insurance policy that will expire next year on 30 September. In this transaction, one asset is exchanged for another. The asset cash decreased by 600. The assets prepaid insurance and increasing by 600. This is an asset because the insurance extends beyond the current month. Payments for benefits that continue for more than the current accounting period are identified as prepaid expenses or prepayments. Noted that the balance in total assets did not change. One asset account decreased by the same amount that another increased. Number 8. Purchase of supply on credit. On 5 October, one limited purchase an estimated 3-month supply of advertising materials on account from error supply for 2,500 assets are increased by this transaction because supplies represent resources that will be used in the process of providing service to customers. Liabilities are increasing by the amount owing the error supply. The asset supply is increased by 2,500 and the liability account payable is increased by the same amount. Account payable present amount owing to supply for the purchase of goods or service on credit. The effect of the transaction on the accounting equation. Number 9. Hiring the new employee. On 9 October, one limited hired 4 new employees to begin work on 15 October. Each employee is to receive a weekly salary for 500 for a 5-day working week, payable every 2 weeks. Employees are to receive their first pay on 26 October. There is no effect on the accounting equation because the assets, liabilities, and equity of one limited have not changed. A transaction has not occurred. At this point, there is only an agreement the employees will be in work on 15 October. Last one, payment of cash for employee salaries. Employee has worked 2 weeks, earning 4,000 in salaries, which are paid on 26 October. Like the costs that were incurred for rent, salary are an expense. There are a cost of generating revenue and decrease equity. Cash are returned year-in each decrease by 4,000. Summary of accounting transaction. The transaction of one Pty Limited, which you analyze to decide if they are to be recognized in the accounting records, are summarized in this figure to show their cumulative effect on the basic accounting equation. The transaction number, the specific effect of the transaction, and the balance after each transaction are indicated. Remember, the 9 has no effect on the accounting equation. So entries include the instruction demonstrated 3 significant facts. Number 1, each transaction is analyzed in terms of its effect on assets, liability, and equity. Number 2, the two sides of equation must always be equal. Number 3, the case of each change in equity must be indicated. Thank you.